What about the US? So the Fed chair has said that he may be looking at lowering interest rates in the upcoming monetary policy. Do you really think the interest rates be lowered, or it's just a symbolic rate cut that's going to happen?
So we believe that, first of all, the fear of inflation which markets had because of the tariff implementation and all that, you will see significantly higher inflation. In US, it is not still creeping up. If you look at the US inflation number, is not so high.
Yeah.
In fact, US inflation is somewhere between 2.5% to 3%. Our overall next 6-month projection also continues to be around 3%.
Okay.
What is important to note is that the trends on growth are significantly weakening. You actually started seeing unemployment data weak, you started seeing retail sales data weak. So that is what is urging Fed to look at some bit of rates easing at this point of time. We have continued with our stance that Fed will do a couple of rate cuts in this year, and we believe so that Fed will deliver 2 rate cuts in this year. Next year, our view is that probably you might start doing some uptick in inflation. That is why the probability of Fed to cut rates will be lower.
Okay.
We continue to hold a view that 2 rate cuts in this year and 2 rate cuts next year. Taking the terminal rate to close to 3/4, 3/2 is where we believe so. Fed will end its rate cycle in this cycle. The important point also is that why we are actually being tactically bullish at this point of time is that along with this RBI twist which can happen on account of lower GDP print or the forecast of print growth being lower, we also expect that the Fed rate cuts also might help bond markets for the near term. So you have a scenario where you will see some positivity coming from global bond markets, you might see a surprise from RBI, probably lower growth expectation, and if the H2 borrowing calendar is rejigged a bit, I think that opens up some sort of tactical opportunities in the near term.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.